Hi. Today I will not say much about the actual practice of sleuthing. If you want to know more, read my book, The Sleuth Investor, and get more details than I can give here. Instead, today I want to focus on the start of the buy and sell decisions. In other words, the targeting of your sleuthing for both. How do you know which stocks are worth your sleuthing efforts, either the buy or the sell, and which are not worth it? A major part of the answer is be sure you make no heroic assumptions in trying to do either. Now, what are heroic assumptions? Quite simply, it is assuming that the company or the stock will do something it has never or rarely done before. And your decision, whether to buy or to sell, depends on your assumption, and it will do, for the first time, just that. You can make such assumptions, by the way, both about the company and about the stock. Here are some examples of heroic assumptions about the future behavior of a company. For example, you assume that a company which has never made any money over the last 5 or 10 years will suddenly start making a lot of it, and much more than it has ever done before. Or that a slow-growing company whose sales never grew more than 4 or 5% per year will all of a sudden blossom into a 24% per year grower. Or that an international construction firm that has always got mixed up in foreign bribery scandals every 2 or 3 years will now clean its ways completely, and its stock will be rewarded for its new probity. All of these are heroic assumptions about the future behavior of a company. Any company. Can they happen? Sure. Are they likely to? No. Now, what about heroic assumptions about a stock? Well, say a stock has never traded at a PE multiple of more than 12. To make sleuthing it worth your while, you must assume it will suddenly trade at a PE of 25, just because, for now, interest rates are lower. That surely is a heroic assumption, no? Or how about a cyclical stock that over the last 25 years has never traded at more than $25 per share, and you assume it will now trade at 50 just because its chart looks pretty or the latest guru recommended it, even though not much else has changed. That too is a heroic assumption. I'm sure you get my drift. If in order to consider a stock worth sleuthing, you have to assume it will rise a lot to make it worth your while, and to get there, you must make heroic assumptions that don't even bother putting sleuth time into it. Why not? Because the risk-reward ratio for your sleuthing effort would be low. But you may say, aren't you risking missing an opportunity that does break all past returns? Sure you are. But remember, it's not your job to catch every unlikely stock opportunity in the market. Rather, what you want is to maximize your scarcest resource, your time and your effort and your attention, by avoiding the most unlikely targets. That's why I never bother with stocks that have surpassed their all-time high and are rumored to go even higher. Yes, I know some use it as a criterion in catching super growth stocks, and good for them, but not for me. I'd rather look for stocks that are trading at close to their all-time bottoms and that may get back to all-time high. Please note, I said close to, not much below the all-time bottom, because there really is no lower limit below which a stock cannot go. It can always get to zero. And also remember, just because I pay attention to a stock doesn't mean I'd buy it. Before I do that, I'd sleuth the hell out of it. Read my book, you'll see. Sleuthing costs time and attention, and because of that, I'd rather pay attention to a cheap stock that can rise to where it has already been before than to analyze a pricey stock for which I have to make a heroic assumption it would go higher still. Now, why am I going into all these details? Because the same reasoning for deciding to sleuth a stock as a buy, a potential buy, the same technique, the same reasoning applies to the sell decision of stocks you already own. Say you found a cyclical stock that has always traded between the low teens and the high 20s, up and down every cycle, like Vedanta, VEDL, mentioned here exactly a year ago. The stock is of an Indian company producing and trading resources. It has a good business, but is cyclical as a moody cat. When a stock like Vedanta is close to its usual bottom point, not just in price, but also in valuation, like price to book, price to sales, EV to EBITDA, then you can invest some time in sleuthing it, which is when I mentioned it on June 8th last year at the price of $4.94. Say you began to sleuth it and found on your own that top management was trying to take it private on the cheap, as indeed was the case. Say also that you did buy some. What now? Well, over a single year, Vedanta stock tripled to 15. It's a three-bagger in 1 year, with everyone suddenly liking resources. Now, should you invest time in deciding whether it is time to sell? Let's see now. What were the stock peaks over the last few cycles? As you can see, they have always been between 17, 18, 19 bucks a share, not much above the current price of 15. So what do? Do you give some time to the sell decision? Well, the same reasoning that applies in dedicating time to make a buy decision of Vedanta would now apply in deciding whether to dedicate sleuthing time to see if you want to sell it. How would the decision go now? Like this. In the last decade and a half, VEDL stock almost always peaked at 18 or 19 bucks a share. Only once it reached the low 20s, but it always fell first below $3.50 before it rose again to the top. So the odds of Vedanta rising from the current 15 bucks a share to say 18 or 19 or 20, that is 10 or 20%, are much lower than the odds of it first falling below $3.50, that is minus 75%. Ouch! Yes, it may rise not just 20%, but 25% from here. Whoopee! But still, this does not compensate you for the risk of minus 75. So, to sum up, upside 20 to 25% based on the past cycle behavior, downside minus 75. Or maybe it could rise again more this time, just this time. This, of course, would be a heroic assumption, which I just urged you to avoid. So, should you dedicate some time to the question of whether you should sell Vedanta here? Please note, the above is not a stock analysis, nor is it sleuthing. It is merely a time management decision, a cold-eyed estimation of whether your time is worth spending on the question whether to keep Vedanta here or to sell it and buy more of another multi-bagger that you now own, whose upside is higher than its downside. Now you're probably asking, so does this mean I recommend selling Vedanta now, if you had bought it when the price was a third what it is now? Well, as I said several times before, I do not make buy and sell recommendations. I only mention stocks as examples of how to do it, how to do stock sleuthing and how to target your effort, which is what I'm doing now. See, the above is an example of the same thing. That's all for today. Leave me a comment below telling me what you think of the above, and if you like it, tell all your friends so they subscribe too. I'll see you next time, and meantime, thank you very much for watching.